I have got some special tips for you that can make you a better trader. One of the smartest ways I have found to trade is by looking for breakouts. If you can learn to figure out when a breakout might happen, you will stand out from other traders who only use charts and numbers. This will increase your chances of making money consistently, which is something everyone wants, right? I will share 2 of my own secrets about spotting breakouts in real-time trading. These are easy methods to help you predict whether prices might go up or down. Do not worry if you think finding breakouts is really complicated. By the end of this video, you will have a much better understanding of how to read the market. Let's stop talking and jump right in. First off, let us talk about my 2 favorite ways to spot breakouts. The first one is when a trend line gets broken. A trend line is like a path that shows how prices have been moving, and when it is crossed, it could mean a big change in how people feel about the market. This can be really profitable. Now, let us break down the trendline breakout idea. Imagine a road on a map that cars have been following. That's the trend line. If the cars suddenly go off the road, it is like the price is breaking the trend line. To make this strategy work, you need to find strong trend lines that connect several price points, like connecting important stops on the road. When the price breaks the trend line, it is better if a lot of people are trading, like when there's a lot of traffic. And for a more reliable sign, we wait for the price to fully go above or below the trend line, not just touch it quickly. But we're not done yet. We can also use other tools like moving averages or oscillators, which are like extra helpers, to make sure the trend is really changing. To make this easier, I will show you a magic-like tool on a website called TradingView. It's like a treasure map that points out where breakouts might happen. However, before we jump in, there are a few important things we need to check to make sure we are making a smart move and getting the best possible price. Let's break this down in simple steps. First, go to tradingview.com, a website where we can see charts about money trading. We will use the Euro United States dollar and look at how it changes every hour. On the website, there is a special section called Indicator. We're looking for something called Trendline with Breaks, by Luxolgo. This thing is like a super helper that draws lines on the chart automatically. It helps us find places where the prices might break out. In the examples, you will see lines drawn by the tool. When a line gets broken and the tool shows a red signal on top of a candle, that means the price might go down. And when a line gets broken and the tool shows a green signal below the candle, the price might go up. This tool is great because it saves us time from drawing lines ourselves. We can choose how the lines are drawn, like using the average true range or standard deviation. Now, let's talk about a simple trick with another tool called the Exponential Moving Average. It's like a line that follows the prices. If you add it to the chart and make it white, you'll see it clearly. Then change the length to 200. If the prices are above this white line, we think about buying. If they are below, we think about selling. To be really sure, for buying, the breakout candlestick must be totally above the white line. For selling, the breakout signal should be totally below the white line. So, in short, we are using tools to find good times to buy or sell. And this is an easy way to make money while trading. Just remember, follow these steps and you will have a better idea of when to make your moves. If you are enjoying this, please give us a thumbs up and consider subscribing to our channel. It really encourages us to create more awesome videos like this. Now, let us dive into our second strategy for breakouts. This one has been proven to make profits up to 79% without too much hassle. Let's break down what this strategy is and how to use it. Think of this strategy as a way to catch big changes in the market. We are looking for moments when the price either goes way up or way down. To do this, we focus on something called support and resistance. Support is like a trampoline for prices. When they drop, they often bounce back up from this level. Resistance is like a ceiling. Prices tend to stop going higher and might start falling back down. When the price breaks through these levels, it's like a big signal that something important might be happening. To use this strategy, we need to check if the price is breaking through support or resistance. If it does, we might have a chance to buy or sell something. But it's not just that simple. We also need to look at other signs, like things that help us confirm if the breakout is real. We also need to pay attention to how many people are trading, and we need to make sure we're not taking too much risk. This strategy is like using a special tool to understand how many people want to buy and sell something. It is like having a secret weapon that helps us guess which way the price might go. This is something that experienced traders use to figure out where prices might move. Let us make things easier to understand. We're going to use some special tools on our chart to help us find strong places where prices might stop or change direction before making a big move. First, let us add a special tool that shows us where prices have stopped and changed before. It's like marking important spots on a map. Search for volume-based support and resistance by TOMF 1001. Also, look for another tool called Swing High and Low by Pattern Smart. These two tools will help us find these important spots. Now, let's set up these tools so we can read them easily. For the first tool, double-click on it. There are a lot of settings, but don't worry. We will make it simple. Uncheck the first two options, then go to time frame and change it to 4 hour. This will help us see important spots even when we're looking at shorter 30-minute time frames. Change the threshold to 5, and for number of zones back, change it to 21. Disable the other time frame options and click OK. Now, for the second tool, go to its settings. Change Swing High and Swing Low to 21. With these settings, we can easily find strong places where prices might stop or change. When we see both the swing high and the resistance zones at the same place, it means that area is really strong. If prices break these zones, we expect them to pull back a bit before continuing in the direction of the breakout. To help us understand these pullbacks better, let us add one more tool called Wave Trend Oscillator by Lazy Bear. Double-click on it to adjust the settings. On the Style tab, uncheck everything except Moving Averages. Change the second moving average to line and make the two moving average easier to see. And that's it. With these tools, we can better understand where prices might stop, change, and even take a small step back before making a big move. Now, let's dive into how to actually decide when to buy and when to sell. It's not as complicated as it sounds. For a smart buying move, we look for a few things. First, we want to see an area where prices have had trouble going above before, like a barrier. We also want to see a point where prices have risen high before. When both of these things happen at the same time, it's like a strong sign. When the price finally breaks above this strong area, we check another tool called Wave Trend. We are looking at two lines in this tool. First, we want to see the red line cross above the green line. Once that happens, we wait for the green line to cross above the red line. This helps us make sure we are buying at the right time. To play it safe, we decide where to stop if things go wrong. That's the stop loss. We use the last lowest point as a guide. And to know how much we can earn, we aim for at least twice what we might lose. That's the profit. The same steps apply for selling, but in reverse. We look for a zone where prices have had trouble dropping below before, like a bottom. And we also want to see a point where prices have fallen before. When both of these things happen at the same time, it's like a strong sign for selling. When the price breaks below this strong zone, we check the wave trend again. This time, we want to see the green line cross above the red line first, and then we wait for the red line to cross above the green line. In a nutshell, these strategies can make you a better trader. Instead of just following indicators, you will learn to spot key moments when prices might change direction. These strategies, backed by helpful tools, give clear instructions for when to get in and out. Don't forget to be careful with risks by setting stop losses and planning for profits. With practice, you will get better at this and be able to use these strategies in real trading situations.